Good morning, everybody. It's Thursday, December 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here saw December corn down a quarter at 421 3/4. January soybeans were up 2 3/4 at 986 1/2, and December Chicago wheat was down a half at 537 1/2. This morning we had weekly export sales. Real solid across the board. 1.7 million for corn. Upper end of the range was looking for 1.5 million. Soybeans came back about 2.3 million. That was again towards the higher end of the range. Wheat 378,200, kind of middle of the road there. Meal 276,000. That was kind of the bottom end of the range. 150 was the low end of the range. And bean oil 19,500. Once again, kind of right in the middle. We also saw an export sales announcement from the USDA of 136,000 metric tons of soybeans to China, and that was for 24. Last bit of information. Also, Stats Canada out this morning. Kind of a surprise in canola, 17.85. They were looking for 18.85. So it'll be interesting to see what we have there in the canola market this morning. Oats were slightly higher on the report as well. So with that, guys, good morning. Dustin, maybe a few thoughts to kick us off here this morning, and then we'll throw it around the room.
Yeah, good morning, Dan. Thank you. I think the biggest thing on my radar is the real is still, I think, a huge impact on the markets. We recently hit a new all-time low last week after the Lula spending cuts were found to be disappointing by the market. So that kind of crashed the Brazilian real versus the dollar. Pushed the price of corn in reals, just simply taking corn priced in real off the Chicago Board of Trade, to the highest really since 2023. So while we were last at this price that they were receiving in real, we were at like mid fives for corn. So it kind of gives a sense of why it's we're not very competitive. Even at these prices in some cases, when there's competing supply. So the thought that in July, safrinha corn is going to be another record crop, is definitely part of the reason I think corn is suppressed at the moment. One thing to consider though is the river levels are starting to drop again. So we're back into the negatives for Memphis. And forecast to go back down, below that low threshold, maybe 7.2, 7.3 below within the next couple of weeks. So that could impact spreads a little bit negatively. Right now, spreads are very lofty right now. March is at a premium to December of 25, we think in part because of the real. But as we get back to that threat of lower river levels, we have to keep that in mind. It could be a little bit negative on the spreads.
Ben, what's on your mind this morning?
Same thing. Just watching a chop. If you step back and look, we've seen a pretty aggressive move in wheat and corn over the last 5 or 6 weeks, with wheat selling and a really strong corn bid. Curious to see if maybe we see a little bit of unwinding of that trade here in the month of December. But really, I just, I hate to sound like a broken record, but I don't think these are markets where you want to you want to draw a line in the sand. Not a time to be stubborn. We got really cheap volatility, which works until it doesn't. And I think it's a good time to kind of think about forward planning more than what you want to do right now, right here, today.
It's interesting to see too. Trump picked crypto advocate Paul Atkins to chair the SEC, and you got Bitcoin this morning over 103,000. So that market continues to go, and you got a stock market above 45,000. So a lot of excitement in the outside. So as boring as our markets have been, you watch the outside markets. It's kind of fun. Justin, any thoughts this morning?
No, I mean, I'm kind of like Ben. I feel like you're saying the same thing over and over. It's we keep trying to rally. We get good demand. We rally, then we fail, and we sell off because the real or South American production looks good, and then we break hard, try to make new lows and find demand again. So I think we're just stuck in a range until something changes. as boring as that sounds, but we keep trying to press to new lows, and we hit big demand numbers. So I mean, demand was huge today, and I think globally things are firming up a little bit personally. So, you know, outside of the big South American crop, right? That's kind of the overhanging bearish thing. You know, how big is it every day? You know, we're kind of in the seasonal, you know, race to who can write the biggest crop down right now. You know, so when the crops are small, we try to race to see who can write the smallest number down, and it feels like we're trying to race to see who can write the highest number down. So I think a lot of that's all being factored in here, and we have, you know, probably gonna have pretty big supply out of South America, and we've got good demand at these prices. The currencies have been a huge factor, as Dustin talked about. You know, I mean, you know, not only are they more competitive with a cheap currency, but it incentivizes production because they have, you know, much higher price at the farm gate. So
Right.
it's hard to fight those kind of currency moves. So yeah,
And you wouldn't anticipate anything big on next week's report either, right? I mean, December kind of tends to be a dud before we get into January.
yeah, I think obviously South American numbers will change, and I think our demand numbers have to change.
Yeah.
You know, I think, you know, specifically corn, soybean oil. I'd be curious to see what, you know, maybe USDA is already on vacation, so they don't do anything, but they should certainly up some of the demand numbers, I think. And you could start looking at, you know, if you take, you know, I look at corn and veg oils specifically, but you can start seeing kind of a tightish market. You know, even Dustin's talked to us a lot on you know, the world excluding China. You know, wheat's an interesting one. What do they do with Russia? Russia's not, you know, Russia's off to the worst start in a long time.
Yep.
So there are some, you know, little lights at the end of the tunnel for some of these commodities. You know, and when you have, you know, Bitcoin is, you know, I don't know what to make of Bitcoin. Besides, I wish I would have bought a lot at $1,000. But when you see these outside markets and the amount of money in circulation, and you look at demand we're seeing and the relative price, I know that's a dangerous thing to say, like, you know, gold versus, you know, corn. I mean, that really doesn't mean anything in the short run. But when there's that much money in circulation and that much money out there, it does make some of our commodities look super cheap. Not that they can't get cheaper, but it doesn't look exciting to me to see how much corn you can get short below $4 or soybean oil under 40 cents. I just think we're pretty big value areas. Now that could take a long time to mean anything, but
yeah, the thing about wheat too is that, you know, it's also ultra tight. If you take Chinese numbers and just, you know, exclude them, just only their import for demand, you know, we're one of the tightest global wheat stocks to use ratios we've had since like 07, 08, in addition to one of the tightest corn stocks to use ratios. We're holding much of this global supply that's outside of China, right? Corn and wheat. So that's a big part of, I think, why our prices are low. We've got a strong dollar, and it's especially strong against emerging market currencies like, you know, Brazil. So it's a tinderbox, in my opinion. I think a lot of people are getting into this perma bear mode and are unaware of what one small trendline yield cut in South American production or Black Sea wheat production or U.S. 2025 corn production could do to the markets.
yeah, to that point, I mean, Russia's been just the hammer on the wheat market for years now. I mean, even since the Ukrainian war, right, we had the spike and Russia just took advantage and sold the snot out of it, right, and have been undercutting since. So to have the worst wheat crop there in a decade or so.
It's on record, yeah. Worst condition on record right now.
Yeah, so you got to kind of, you know, it'd be like if South America was having a really big problem and they've been pounding the bean market for 2 years. So I think right now we're just conditioned into not falling for any bull market news, if that's what it feels like to me. Like you can get, you know, we get good sales, you get good announcements, things that haven't happened in a long time, and we just kind of poo-poo it and sell it off. So yeah, there's like I said, I think there's several things, Dustin, at that point that
Well,
it's got to be open-minded too.
You know, I agree. I think it's it feels like a market where we're going to sit down here and do business for a little while. Then all of a sudden people are going to say, maybe we did too much. And, you know, maybe that's a January, February type thing. But, soybeans, it's easy to buy into the bearishness of the narrative because it is a very bearish narrative. But we are trading 993, and it feels to me like maybe beans have lost some momentum to the downside because there's been some decent volume days, and it just can't push through. You know, we've talked about this before that beans could have a 10% dollar rally, and it wouldn't do anything to change the overall bearishness, but it might provide you with a better opportunity from people just trying to hammer this thing in the hole with one of the slightest, slight adjustment, something looking at maybe a little bit of a weather shift in some way. And then we've got a WASDE in January where on the last report, we saw a move to reducing US yields. So if that stays in that direction, I think that you can cut this pie a couple different ways, and you could get to reducing carryouts fairly significantly pretty quick by raising demand, lowering yield, and looking at prices that are at, closer to 4 or 5 year lows than they are than they've been in those 4 or 5 years. So I think you got to have some humility looking forward. But I don't think this is the time of the year to get to.
So I remember, 2016 sticks in my head, but we were $8.50, $9, and everybody's getting super short because of Argentine election changes and all this beans that were going to free up, and there's no demand and we can't compete, and people just got too bearish. We rallied 50% in 3 months. We went from 850 to 1250. And people got caught, way too short. And so things can change, especially when you get lulled into this like super bearish mode. Cheap vol, people are selling cheap vol, anything, because that's the only way to make money spec wise. So
that was kind of some weather too, right? In Argentina got clipped. Right?
Just a couple of things change. It didn't take much, but you have people leaning too hard, and then it's how news comes out too. Is like go from super bearish to like, oh, that's kind of a friendly thing. It happened in 2020 with China started buying U.S. corn. It was kind of like, oh yeah, but we got a lot of corn, and then like the next thing happened, and then oh, Iowa had a windstorm, and then all of a sudden you're double the price.
Well, even in 2012, right? I mean, we got it planted. It was really dry. We were coming off of some high prices, right? And everybody kind of discounted the dryness all. It took a long time for the market to kind of realize there was a problem.
Ben talks about recency bias a lot, right? It's just like it hasn't paid you to be bullish, so you might as well be bearish.
So it makes it fun, right?
Yeah, fun, scary. Yeah.
Well, I had this conversation with a customer, and we were talking about 25, and I said, well, I think you'll have better opportunities than what you see today. Actually, Jason and I were on the same call with one another, and I think that the importance of that is, how do you construct those hedges when you get that opportunity? Because the hardest thing to figure out in a 50, 60 cent corn rally or a dollar bean rally is, are we at 1080 on our way to 13? Or are we at 1080 on our way to 880? Right. And I think that becomes where a little more scrutiny goes into what your strategy looks like when you overlay it with your profitability and your insurance. So
that's a great point. Rylan, we saw some 190 trade in the north, and really starting to see some volatility pick up in the hogs as we get to these record highs and big swings during the day. So what are your thoughts here this morning as we start?
Sure. I mean, just overall cattle just seems like uninspired trade, just kind of drifting sideways right now. We saw the steady trade in the north, just a little bit on the FCE yesterday. It was 186 bid, asking prices 192. So overall, the sentiment's still relatively steady, possibly even higher trade this week. So asking prices are holding around 192 to 194. But overall, it just seems like the market's kind of stuck a little bit. We got option expiration coming up here on Friday. The largest open interest in the puts that are the 88 puts, and the call side is 190. So it seems like we could probably just chop around there unless you get some really strange piece of news that would really jack us up, in either place just before that. And then you got Monday, first notice day. So wouldn't be surprised to see that length kind of continue to roll forward. Anybody that's trying to skate delivery in Dece. But overall, yeah, it's just kind of a waiting game right now, just seeing what's out there. Export sales were nothing special on the beef side of things, at a marketing year low of 100 metric tons. That was it. So nothing, no big surprise there. Otherwise, yeah, we're seeing a little bit of weakness in the hog side of things. Traded right down to the 20-day moving average in February. So we'll see if we want to bounce here. It seems like just the big specs really like to kind of find these moving averages and and jump in here, but open interest is down just a little bit. So it just seems like, once again, just, we saw carcass just relatively steady. Bellies were back up yesterday. Cash was firm overall. So it just doesn't seem to be getting a whole lot of bad news right now, especially on the export front. 35,200 metric tons in sales. Obviously Mexico is the biggest buyer of that at 15,400. So that demand looks like it's still here. When it goes, nobody knows, but overall, it seems like that's a big catalyst right now, just to kind of keep everybody pretty optimistic still, even though we've seen kind of 2 days of straight down.
Very good. Appreciate the update there. A couple things to note. Next Wednesday, we've got a couple of webinars that we're going to be hosting. One at 10 o'clock Central is going to focus on government programs and crop insurance. We've got a special guest going to visit with our team on just some different thoughts and ideas as we look out to 25. That's going to be reserved for AgYield specific clients. So the registration, they can go get registered, and we look forward to seeing everybody there at 10 o'clock. And then at noon Central, we are going to be hosting an open forum webinar touching on financial services and the roadmap for 25. We've got, again, a couple special guests, real exciting lineup for you. We're going to talk about, all things lending and how to be prepared as you go to sit down and visit with the bank here, getting ready for 25. So be sure to tune in, click the link in the description, and that'll get you registered there. So looking forward to talking to everybody there next Wednesday. Also, tomorrow is Friday, so we'll have Fun Fact Friday, which is always a good way to start the weekend. And if you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. We appreciate everybody that supports the show and tunes in on a daily basis. So if you would, please throw us a like and subscribe. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.